Paul, welcome to Closing Bell. Bloodbath on the markets. Dow down 1% for the first time in 2012. We're looking at the Dow sitting 1% down.
Yes. So it's the first time in 2012 that we've had a market down more than 1%, although we have had lots of intraday falls, and then by the time the close comes in New York, which is currently 11 o'clock at night our time, it's crawled back either into the green or below.
Is there any hope that it's going to crawl back into the green today when we see this red across the board?
Because the fact that it does that is because institutional investors are like Pavlov's dogs, you know, they're trained to buy the dips. So normally what happens is the data comes out, people start assimilating it, and the next thing starts to move higher. But it's a very interesting shift because last year we had plenty of volatility, and as you'll remember, 2010, many days where the market was up or down by more than 1%. People prefer this kind of environment, except those people that are sort of short-term traders. But, you know, I mean, for the long-term investment market, this is great.
This is a great opportunity always to be buying, picking up on stock. But the question is, how long is this downturn going to last for this time around? I mean, I know you didn't bring your glass ball today,
Yeah,
but what is your sense in terms of market mood right now? Because it appears to have gone southwards and quite
It does seem to have kind of come a little bit unraveled, but remember the underlying economic releases have been quite good. It's more these sort of global macro factors like Iran and Europe and so on, which kind of knocking around. But I think the underlying economic data has been good, perhaps with the one proviso that China is looking a little bit sloppier than it did a few weeks ago. So I expect this to be not really a major negative event, but you know, these things feed on themselves and then people start getting anxious.
You mentioned oil. Is oil the new Greece now for the markets? Because are we going to start seeing this high oil price feed into economic data?
Well, people thought Portugal was going to be the new Greece, but Portugal wants to be the new Ireland. Then people thought that, you know, America might be the next Greece, but then, you know, maybe China will be the next Greece. I think at the moment all we can deal with is that Greece should be the next Greece. We'll be able to leave that one alone for the time being. I mean, oil prices are high, but remember we're at 106 or thereabouts for West Texas Intermediate, much less than the 145 we reached, you know, back in 2008. So I'm not losing any sleep over the oil price. I expect it to be at these levels, and I don't think it's punitive for the rest of the global economy.
Another question I have for you is, are you going to show up for work tomorrow? Or are you joining Kasatu on the streets?
No, I'm definitely not joining Kasatu on the streets. And for the record, I think labor broking is a fantastic thing because it creates flexibility in the labor market. It means that workers can be moved around without creating inefficiencies, which results in more jobs, not less. Although I can understand why Kasatu hates the idea because it's hard to organize people who work for labor brokers. And secondly, I am in favor of tolling. But that's a tricky one because it worries me that in the Gauteng area, lots of people will drive through the tolls without paying and they'll never make them pay, like the traffic fines in Gauteng, which only 15% of people pay. Someone told me the other day, which is despicable.
The administrative burden, of course, is the big issue with tolling. Anti-striker Paul Theron, CEO of Vestac, joining us for Mad Markets today.